Joining us from Gerber Kawasaki Wealth and Investment Management, Managing Partner Hatem Dhiab is back with us. Hatem, thanks for being with us here this morning. What can they do to turn this train around?
Good morning. Thank you for having me, Oliver. I'm excited. I'm excited about Netflix. I'm excited to talk about growth again. It's been a brutal run for all tech the last few months, and as you said, Netflix is down to $100 from its high. But I think people need to focus on earnings and what's gonna drive them for growth in the next few months.
We haven't seen Netflix trade below $500 much at all the last year, so you would think based on this chart, I don't know if you're a chart guy, Hatem, but to me it looks like there should be a lot of buyers down here at $500.
I think for long-term investors, absolutely. I mean, you've seen that on a lot of these high-quality tech names, which Netflix is one. We're looking. So I think Netflix is going to be a bellwether for Hollywood. They've always been leaders in new content, and what we're looking for one, how many new ads they're going to have, how many new subscribers are going to be on the platforms. What's the pace of normalizations coming out of this pandemic? And really how is the slate of new content coming in along with international content they've been very, very successful at making.
So Hatem, in terms of what matters to this stock, is it revenue? Is it just subscribers? Is it their plans? Is Netflix going to get rewarded for big spending plans, or have we already seen that play out and now maybe investors want targeted more programming? I don't know about you, but I'm kind of running out of content. I feel like I went through all the good stuff on there.
I don't know, man. There was some really good content over the holidays. I think revenue is kind of predictable. What people are looking for is really how many new subscribers and how many new subscribers internationally. Netflix has about 79 million US subscribers. So they're saturated here in the US and North America. So I think people are looking of what's happening overseas. What Netflix has changed and has done is really been able to create international content, find some really awesome creatives all across the world and make some content that is desirable to the rest of the world. Think Squid Game, think Money Heist, shows like this that, were made in other countries, but everywhere around the world likes and watches. So I think we want to see what that looks like. And then thirdly, we want to look at what new content is coming next year, right? That's always a kind of a teller of how well they're going to do, because if you have new content coming in, you're going to see a new subscriber growth. So that's really the biggest thing that we're looking for. And then really how much money they're going to spend on content. They spent $14 billion last year, which is a huge number in Hollywood.
It is.
They've always been big spenders, and we want to see how much they're going to spend this year. It's going to be another big number, but it's well spent. What
about price hikes? How does that factor in? I mean, some cities here in Chicago, we have a Netflix tax, so it's even more expensive than it looks on the surface. So as they change prices around, does that have any potential to limit subscriber growth, or are people locked in?
I don't know. What do you mean a Netflix tax?
Yeah, we've got a Netflix tax here in Chicago. Yeah, a lot of people don't know it.
Wow, okay, I didn't know that. Okay.
Streaming tax. Netflix tax for short.
The cable companies probably push that. No, I think, listen, they have a pricing power, right? They have the best content. If you want to watch Money Heist, if you want to watch any really good show on Netflix, you have to pay it. And frankly, people are staying at home. People, are used to having access to some of this content, and Netflix can charge them, $20 a month. It's really not that big of a deal. And that price hike that they announced last week is probably going to increase their revenue by $1 billion. So it's a big number for them. I don't know how many people will cancel their service because of that, especially if they bring in some new content. January in Hollywood is award season. That's when you start talking about the Oscars and so forth. And Netflix is very much in the mix there. They have, I think, The Power of the Dog is slated to be Best Picture for the year. So there is a lot of new content that's going to come in that people will want to watch. So I think that price hike would be fine.
Hatem, I know that as stock pickers, you're excited about the earnings and the potential for the narrative to shift company specific, but I would be remiss not to point out that Disney is also down by about 15% just since the last earnings, well off the highs from a year ago. Roku has gotten totally crushed in the last 6 months. Is it a coincidence that the streamers as a whole are under pressure? Is there some degree of stay-at-home froth that's been unwinding? How do we know when that's done?
I think it's probably a mix of both. Disney has different problems. First of all, we miss Bob Iger, who was an amazing CEO for a long time. But I think Disney, I was disappointed. I didn't see a lot of good content during the holidays, right? Like this, Christmas and Thanksgiving. You want to see new movies and stuff. And they really didn't have anything exciting. Roku was just super highly valued stock, and it's getting into a business that's highly competitive. So they're gonna have trouble really competing in that. As to when you see the end of this, I think as a stock picker, as a company that looks for different names, this is what you want. You want to see where the value is, who's growing, and at the end of the day, that's what it is. Who's growing? Who's really kind of printing those 20-30% growth numbers? Who's making money? And those are the high quality names that people want to own going into the next growth cycle.
Okay, Hatem, thanks for the preview here. Appreciate it to get us all geared up and jazzed up for a potential comeback. Hatem Dhiab joining us from Gerber Kawasaki Wealth and Investment Management.